Hey, this is Matt from InvestiQuant. Today is Friday, July 2, 2021. Today is the day of the non-farm payrolls report. That'll be out here in a little bit. I am recording this ahead of the number, but the markets are trading higher. They've continued to drift higher all week, really, and they are trading a little bit higher right now at the time of this recording and ahead of the non-farm payrolls report. So we're going to go ahead and look at what has happened on this day historically in a similar market environment. I've got all four instruments loaded here, and we've got the trade type set up as a long at the open of regular trading hours. So next I'm going to go into the opening filters, and I'm going to say that we are gapping up. I don't know that we're going to be gapping up, but that's where we're trading right now. So that's what I'm going to use for this study. And then next, I'm going to go into the indicators section, and I am going to put us in a bull market environment where we continue to make new all-time highs. I've got us above a 10 and above a 200-day simple moving average. And then lastly, in the market events section, I'm going to say that today is the day of the non-farm payrolls report. So I'm just going to scroll down just a little bit, hit equals next to non-farm payrolls report. That'll add it up to the top, and now I can click view results. And here we go. These are the results based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and then exiting at 4:15 p.m. Eastern Time when you gap up above the prior session's closing price on the non-farm payrolls report day in a bull market environment, which I've defined as above a 10 and above a 200-day simple moving average. Historically, we've got 80 samples in the S&P dating back to 2003. We've got 73 in the NASDAQ, 68 in the Dow, and 62 in the Russell. The win rates on these are kind of mild. You've got the S&P, which is the strongest of the group at 61%. NASDAQ, very neutral, 52%, as is the Dow at 51%. And then the Russell, a little bit favored as well at 58%. So win rates as a group here, not all that impressive. On the full data set, looking back to 2003, the S&P and the Russell are the only ones that are mildly favored there. On the average win and average loss size, they're pretty similar for the S&P. The NASDAQ has a larger average win by quite a bit, and then the average loss is a little bit larger for the Dow and the Russell. The only thing that really stands out here to me on this one is the more recent years have been stronger, and you can see that in the equity curves that have all peaked up here, especially here in the NASDAQ. You can see NASDAQ's been really strong for about 5 years now. There's the S&P. You can see it's starting to lift here in the more recent years as well. And you can see that down below in our table below that kind of breaks down the stats by different look-back periods. You can see the last 5 years in the S&P has been 76% win rate on those. For the last 5 years in the NASDAQ, 76% as well. For the Dow, a little bit more neutral. And for the Russell, around 70%. So long term, not a huge edge here, but in the more recent years, you can see it has been a little bit stronger. So hopefully you found that helpful. Good luck today, and we will see you next time.